Hello, everyone. Welcome to the World Responsible Leaders Dialogue. And my name is Xiaochen Zhang, the president of FinTech4Good. And today we are going to talk about the future of compliance. And many of you are in the blockchain, fintech, or financial space and in finance. And we have to deal with compliance. And it's a very critical component to just support the financial health of the system in any society. And of course, that compliance means different things in different industry. And if you are in a PE firm, or if you're in a bank, if you're in a fintech company, and the rules are different. And of course, that the cost of compliance also different. And the professionals in the compliance industry and have compiled a lot of or generated a lot of knowledge insights, which are extremely important for the further deployment of fintech or digital finance related innovations. And today, that's we have honor to have very exciting speakers who are the long-term veteran in this space, and they can share with us what they have done in the past to just make their own industry a healthy industry, and also what are the new ways that the compliance can be done, especially in responding to the emerging of fintech, blockchain, and digital assets. So welcome to the show, and let's start from the brief introduction. And maybe firstly, I'd like to have Brian to introduce yourself.
Well, thank you for having me. It's great to be here with this panel. Exciting times for sure. My background, I'll keep it brief. 35 years in the financial services and the private equity space, the last of which was at KKR, where I acted as the chief audit executive and had a role with enterprise risk as well. Also headed up various heads of audit roles over at Lazard and Morgan Stanley. Since retiring from KKR back in June 2019, I currently serve on a couple of boards, profit and non-for-profit. I serve as an adjunct for university, and I also serve as a senior advisor for Grant Thornton with their private equity team, working on their strategic footprint. So that's a little bit about myself, and glad to be here again.
Thank you. And Carrie.
Yes, good morning. I'm Carrie Wisniewski. I've been in the financial services industry for 35 plus years, and I started when I was really young, obviously. And since 1994, I've owned and operated BD Compliance Associates, which is a regulatory compliance consulting firm. And in 2007, I founded Bridge Capital Associates. We are a middle market investment banking shop.
Thank you. And Srini.
Hello, good morning, everyone. This is Srinivas Enamandra, currently working as the Chief of Compliance for the BRICS New Development Bank. And I have been taking this role since January 2017. And I have almost about 20 years of experience as a compliance officer. All my experience is primarily in the area of regulation and banking regulation and compliance in India. Working mostly for the private sector banks before joining the New Development Bank. And currently I'm also a visiting fellow at the Cambridge University, working on regulatory aspects relating to sustainable infrastructure financing, and have most of the interest in the area of fintech innovations, and working with institutions like the International Telecommunication Union on topics relating to digital currency, and have a kind of have been keenly following in terms of the Chinese trends on fintech and regulation in the last 2-3 years. That's a bit about me. Thank you.
Thank you, Srini. Yeah, we have another speaker from Hopi who will join us a bit later. And my first question will just go to Brian. And yeah, the compliance profession is somewhat mysterious to many. And as a compliance professional, what does a compliance professional's typical day look like for you?
Well, that's a loaded question, but I think a good one in terms of how we have to think about the role. And I would say that I think compliance and any risk and control function tends to, in my mind, for it to be a successful one, to breed success, is to go beyond your customary transactional and surveillance work. I do think that I think it's important that you act and serve as an advisor to the business. And that means a whole lot of things to a whole lot of different people. But I don't think it's just an operational featured role. I think you need to have a commercial mindset when you operate and when you act in a compliance control function. I think you need to be accessible. I think you need to think critically. And ultimately have a seat at the table. And when you are able to put yourself in a position in that role, the role itself expands, which we'll talk about during the course of this panel. But I think at the end, by doing all the things I had suggested, you do engender a sense of tone at the top, which I think the stronger that tone, the more effective your compliance and more pronounced your compliance and control functions become. So I think that's important. I think in terms of day-to-day, we'll get to some examples for sure, but I think in this whole thing about using smart technology and investing into a compliance function using technology, we'll take it to a different level in terms of being dynamic and equipped to do the right things for the firm. You might want to take yourself off mute.
Yeah, when you were still with KKR or with other financial institutions, why did compliance matter for them?
Yeah, it's a great question. Yeah, it's a very good question. I think you have to really commit to having an effective compliance function. And so when I think to myself about the role of compliance, which in my mind can go beyond just the importance of bringing the firm into being able to have a license to operate. Really think about the nature of private equity and what it means to the firm. And if you go beyond your customary, and keep in mind, although I headed up the audit function, we were in deep partnership with the compliance function. So a lot of my views I can comment on is by observation, as well as being such a deep partner with the compliance function. But think about it in two ways, which I would offer that makes it and separates compliance, which is more than just the ordinary, right? So you look at it from a fundraising standpoint. When you're having an incoming investor coming in to buy into a private equity fund of KKR, what is very commonplace is for them to do operational diligence, right? Coming in, and it's not just financial operational diligence, it's not just environmental. They're going in to really understand the body of work and the framework of the firm as a whole from a control, compliance, and risk standpoint. So operating and functioning in that diligence process is itself your way of serving a helping hand to land a particular account. So I think that's one way to look at compliance. It goes beyond just traditional. And I'll turn this around to one of private equity firms in KKR, for example, going in and making investments into portfolio companies. And again, the same thing, you go in, you do your diligence, you do your environmental and financial assessments, and you look at the investment from an accreted valuation standpoint. But notwithstanding all that, you really need to be going in and looking at things like FCPA and cyber risk, and that's a role that compliance can play. And so a company that might look very much full of gold could be fool's gold, and you have to be able to get underneath to head off those risks, which otherwise would have a private equity firm going in to make that investment, getting ahead of it by doing FCPA evaluations, which is something that the compliance role could feature in their program.
Thank you. Yeah, and Carrie, as a broker dealer, and what are the key rules that a broker dealer have to comply with, and what are at risk if they don't comply?
Well, the firm itself is at risk if they don't comply. It's hard to say what exactly the key rules are. There's been new rules rolling out about every 3 months for decades. And the cost of compliance has really gone up in terms of technology, going back to what Brian said. it's become a lot more important that we find solutions that can analyze large amounts of data for us very quickly. You know, but in terms of a typical day in compliance, we always laugh and say there really isn't one, because a lot of times it's just putting out fires. It could be responding to regulatory requests that seem to come out of nowhere. It could be meeting with senior management to talk about large business initiatives that are coming up and how that's going to impact the compliance system. But mostly, it's, you know, Brian nailed it on the head with tone from the top, because if you don't have senior management and firm owners supporting the compliance officer, it's not going to be an effective compliance system. And there's going to be issues. And the risk today is if the regulators come in and they find a situation of non-compliance, they will personally name the compliance officer in any regulatory enforcement action. So it's the risk factor for the actual compliance officer has gone up significantly.
Yeah, and you know, another following question is that, you know, probably again in the broker dealer setting, that, you know, why do you think that the government or policymaker need the broker dealer to comply?
I don't understand the question. I'm sorry.
Yeah, and who do they want to protect, and from what type of risks?
Well, the whole mission statement of FINRA is market integrity and customer protection. So they really they've tried over the last years to protect what they consider a retail customer. That's you and me, from fraud, from unsuitable investments, just really honed in on the retail investor. But in recent years, they've reached out further and further to the investment banking world and the institutional markets, where they've really tried to insinuate themselves, and they don't really know, in my opinion, very well how the institutional markets work. So I'll give you an example. I went to a recent conference where the president of the organization said he was testifying in front of the Senate, and he was asked by a senator how many investment banking transactions they close in a day. And he said, well, we don't judge it based on days, we judge it based on years, because it's not every day. But there's so much that goes into the back end process to get it to a successful transaction that, you know, it could take a year or two easily. So really there's a learning curve for the regulators in that particular space.
Thank you. And Srini, and for you, that's, you know, you've been working in the national bank, and now that you're working for a international organization, and so yeah, what does your daily life look like when you work? And also, you know, why is compliance important for the organizations that you work with?
Yeah, I think I need to give a little bit of background between the two type of institutions that I have worked in the last few years. In my previous avatar, I have been a compliance officer for regulated institutions. They're all like licensed commercial banks. And the one that I'm working now is the BRICS New Development Bank. It's more like a self-regulated international organization operating under multilateral treaty by the member countries. But the only difference that it can bring to the life of the compliance officer is in terms of the source of regulations. Where do we derive the regulatory mandate, or where do we derive the need for complying comes from? In the previous organization, it is from the the license which has been given by the Reserve Bank of India, the country's regulator. And in an international organization, since we have international privileges and immunities, and it is a self-regulated entity, so most of these policies and procedures that we do comply in our day-to-day life are derived on the basis of the best practices that multilateral development banks generally follow. So irrespective of this source of the regulation, I think the typical day definitely looks more or less similar. We focus upon the policy frameworks, especially in my role as the compliance officer. The two important mandates that I would have are basically to protect the organization from the corruption-related risks and also the money laundering-related risks. So the anti-corruption and the anti-money laundering policy, so that begins with the policy framework, and we do have processes in terms of ensuring that these policy statements are incorporated into the day-to-day operations. So typically, you as a reviewer of internal policies and processes do give inputs in terms of how these policy statements in terms of integrity principles impact your day-to-day operations. That's precisely the internal kind of a working within the organization. But since we operate as a what we call a loan provider or a financier for most of our member country project operations and primarily in the infrastructure organizations, our primary comfort is in terms of how these countries operate their compliance systems themselves in their own country. So that is what is called as country systems. So most of my work also is to understand how each country operates their own anti-compliance, anti-corruption related frameworks, how each country operates their own anti-money laundering statutory and regulatory frameworks. So part of my job is also to keep in touch with these national authorities and try to learn from how these guys are gearing up themselves. And for that purpose, maybe our presence in certain international forums, like say, for example, the regional forums of the FATF or the periodic interactions with our BRICS national authorities, that would also constitute a part of the daily work. So irrespective of the source of the regulation, the workday looks similar. But additionally, the challenge is basically to interact in close coordination with the national authorities. That's an additional, I can say, coming from a different country context like BRICS, that is a kind of a challenge that we have to accept and work in the case of our new role.
Yeah, and you know, in your case, I think it's a very interesting perspective where you work for this international organization which just cover a few countries, and each country has its own legal system, compliance system, and in your position, or have you observed that the compliance system in different countries are not in line with each other, which may cause problem, and how such effort can be coordinated to make sure that the international transaction could be streamlined in the way that the compliance it not becoming a hinder to progress, to collaboration, but compliance is becoming a effective tool to just effectively to promote the transactions or collaboration.
Yeah, I don't think there could be any kind of a inconsistency or kind of issues with respect to inter-country operations, because as an international organization, our transactions with each of the countries are bilateral. So I don't really need to do inter-country transactions as such. So when you give a loan to a particular country, your framework to look out is what is the compliance regime or the regulatory regime within that country. So for the bank, it is a kind of a bilateral transaction for each and every loan that it finances for any infrastructure project. And once we take that inter-say or inter-country issues out, then the question is basically, do we sitting in a central location observe any kind of inconsistencies just because of our experience? To that, the answer is slightly no. Because these all 5 countries in both these spheres, in the sphere of anti-corruption and in the sphere of anti-money laundering, both are signatory to members of international forums. Like in the case of anti-money laundering regime, all of the 5 member countries are members of the Financial Action Task Force. So every of these regulatory regimes in their respective countries do flow from the recommendations of the FATF, and they are all subject to mutual evaluation reports of the FATF according to the cycle, and whatever are the recommendations from the FATF forum that applies for each of the country systems to operate. And in a similar manner, there is this G20 membership for each of the 5 member countries, and the G20 principles relating to the anti-corruption that make most of the work of these countries in terms of drawing their agenda on the anti-corruption efforts. And also this OECD anti-bribery convention is another important principle which each country have to anyway attest themselves to. And that also gives some kind of a comfort in terms of the high-level principle compliance consistency between these 3 countries. So the operational aspects might slightly differ depending upon the institutional setup, but broadly at a principal level and at a key elements level, most of the countries follow from the international best practices. And also being a party to these forums also give them an opportunity to periodically meet at these forums, under the sidelines of the FATF. These countries' financial intelligence units do meet and exchange their notes in terms of what's happening and the collective view in terms of the matters put up to these forums. A similar kind of a thing works at a multilateral level in the G20 forum. So there is a constant flow of information across the countries on these policy matters, and that makes a kind of information exchange and learning experiences from each other. It also helps these countries to know what's happening in other jurisdictions.
Thank you. Yeah, and just as Carrie mentioned earlier, that the compliance in almost all countries change. It changes constantly. And Brian, according to when I remember, when I was engaged in the fintech related conversation, and many times you see the current banks or financial institutions who are heavily regulated, and then when you're looking at the other end, the rising of fintech and blockchain company, and who are offering financial service or quasi financial service, but they ask for totally different type of compliance, and then they always just make the statement that the compliance may just kill us, and because we are operating in a totally different type of environment, and the compliance from the old time doesn't work for us. So for you, and what does technology or what challenge does technology bring to the compliance industry and also to the regulators?
Yes, a lot to think about on that, because one, you want to be invited to the table. So you, at the same time, we talked a little bit about this before, about having a tone at the top. And there's been a massive shift from compliance being accepted as a license to operate, I've used that terminology before, to one that could become a competitive advantage. Regulations could be very complicated. It could be very dispersed in terms of it not being uniform from country to country, especially when you're dealing with a global firm. I do think that there are a lot of challenges with that, right? Because you need to demystify and simplify what the regulations are. I think technology plays a big role in trying to simplify. And if you think about compliance, and a lot of what's been done historically has been much more manually driven. And you have to look at compliance in any role for that matter, audit, compliance, any second or third line of defense, first line defense. When you really look at the way you operate, you have to act as it's your own business. And so there are cost pressures, and you have to be inventive and creative with the way you run your function. And so to do that, I think there's a definite emphasis on investing in technology to make yourself become more optimal, to eliminate the basic blocking and tackling that might be out there, very manual driven work, AML, anti-money laundering being an example, know your customer, that's very documentation driven. So what you're trying to do is shift their capability from one that's more productive in that sense of acting in a production environment, letting the technology to do that work, to doing more of the analytics and the more strategics that go behind all that work. So, and whether you're building your technology around surveillance transaction, to know your customer, or privacy, all of which is something that's tantamount to have a license to operate, you need to build the technology to allow you to step away and act more prudently, more efficiently, and serving as that advisor to the business, which I alluded to before. Technology is not easy. Lots of technology out there that we need to be thinking about. There's technology that will evaluate even the changing regulation, that will allow you to automatically classify and summarize when the regulations get changed, and you evaluate the impact as such. So it's the receiving of the change from the regulation to acting on that change and building the right level of technology to allow you to be more optimal with the way you operate.
Yeah, and I think, one thing, what is the important important observation is that, a lot of people just equal compliance with the license. And, in many cases, it is true, but, in other cases, especially with emerging technology, might not be sufficient to understanding. And a lot of time that, we always just put compliance and innovation together and see, compliance versus innovation. And is this, binary thinking right or wrong? And, we, on the one hand, we want to have a new innovation to solve problems. On the other hand, we want to have those people who are served by the innovation to be protected. So, compliance is always a dancing or trying to strive for the balance between the innovation to solve problem or over protection or insufficient protection. So
Right.
in your view, in the US, in your industry, do we have the right balance now or not?
Yeah, well, there's definitely a degree of adjusting. I think we fight the urge to over-institutionalize. There's no doubt about that. I do think that there is a need to invest the right amount of technology to allow you, as I mentioned, to do other things. I'll give you an example. Regulatory filings and regulatory reporting. In the world, in the eyes of private equity, as you may know, portfolio companies get invested in. You need to track the amount of ownership interest. If you exceed, for example, like a 5% quota, there's a 13D filing. Historically, that's been done very manually. But if you have the right technology, you invest in that technology. That's more of a mechanical, systematic way to track your investments across the complex. That allows you to be pulled away, then to do other things I've mentioned. I'll give you examples of what you could do when you're not busy doing 13D reporting on a manual basis. You could be doing things like influencing what the phishing attacks might be inside the firm when you're practicing cyber control. So very different. So it doesn't have to be. So there's a technology influence. You're not organizing or orchestrating that, but what you're doing is influencing that in a way that you can get to where otherwise you would not, because you're doing some of the manual work in the past. So, but it's definitely a give and take. You always have to go in with the mindset that you do your costs benefit analyses and you try to get where the break even is, where that comes back to you. You try to translate it to headcount savings, or what we'll call FTEs, or full-time equivalent. So it's some math, but it's also instinctive, and you're fighting the urge to overdo it and hitting the low-hanging fruit. And then when you get that done, trying to be creative and understanding the investment you make and the economic benefit and the optimal benefit that comes your way if you make the right investment in the right way.
Thank you. Yeah, and Carrie, the same question to you. And currently, that's for broker dealers, is compliance or is this too much, too little, or we have the right balance now?
I think you can find the right balance if you invest in the right technology. I've seen a lot of broker dealers that purchase really expensive subscriptions to solve, a very minor problem that could have been taken care of manually. And on the flip side, I've seen firms that have chosen their investments in technology very wisely, and it really frees up the compliance staff to, going back to what Brian said, to focus on more high-level issues that may crop up and to focus on mitigating risk before a problem occurs. But a lot of times with compliance, it's like chasing your own tail, because the rules change very quickly, and what the regulators are focusing on changes very quickly. So you have to be sure that you're up to date, educate yourself on all the rules and regulations, that you develop the right supervisory procedures, you train the people beneath you, and then you audit that. So it's a continuing cycle throughout the day and throughout the week. But it's really been helpful to us as a brokerage firm to have some really good technology so that we can focus on the larger risks ahead of us.
Yeah, and if, for example, now a regulator just come to you as an expert in the industry for advice, and how can we improve, and what would be your top one, top two ideas that then they can improve their work?
Oh, if I was going to train the regulators, we train them every time they come in to do an examination because they really don't understand our business model. The examiners that are hired by FINRA and the SEC tend to be focused on, retail customers and traditional stocks and bonds. And in our firm, we're involved in, we're intermediaries between two companies, one who wants to raise capital and one who wants to supply the capital on the private equity side, or it might be a company that the owner wants an exit strategy. So we don't have any retail customers. So when the examiners come in, they immediately want to look at records that just don't exist in an investment banking firm. They'll ask us for things like our trade blotter. Well, we don't have one. They'll ask us for, I can't even think of just crazy stuff that, doesn't exist. They want to know if our customers got best execution. I'm like, there is no best execution in a negotiated transaction. So it's, I've actually argued with FINRA as a member of the district committee for the Southern region that they should do some specific training for examiners in the investment banking space because they just don't understand it.
Yeah, thank you. And Srini, and yeah, you have been not only working as a compliance officer for banks, for international organization, but you also spent quite some time in the digital related blockchain and digital as a related options or innovations. So for you, that's how do you just interpret the challenge coming from the digital revolution to the current financial service in general, and how should just the compliance sector respond?
Yeah, I think before really getting to the challenge, I'll take a minute in terms of how, say, for example, these digital innovations are shaping up public financial aspects, actually, not just the commercial banking and the securities industry. But from a public finance perspective, I generally consider these three important innovations are worth mentioning when we talk about fintech innovations. I call them the 3Ds, the digital payments and the digital currency, the distributed ledger technology, and the deep learning, basically the artificial intelligence algorithm. So the 3D technologies are basically going to shape up the way we conceive most of the not only commercial banking but also the public finance space. From a digital currency perspective, we are now seeing most of the central banks and the financial authorities across the world are experimenting on different models of central banking digital currency. The motivations are many to include the financial inclusion as a kind of an aspect, and also to promote a kind of counter strategies to the cash-based crimes like corruption and money laundering. So a lot of central banks are working together to ensure a kind of a right architecture for the central bank digital currency. And the second, basically, on the distributed ledger technology, the traceability option gives most of the public authorities an opportunity to leverage upon this traceability and also arrest a lot of these pilferages in terms of the tax leakages. Like, for example, in China, the government of municipal authority of Shenzhen tried to leverage upon the blockchain in consultation or collaboration with the WeChat payment industry, where they have tried to put in the entire ecosystem of the citizens and the municipal authorities and the merchants and the payment system and the users and the employers, all of them into the blockchain, so that the transaction trail completely can be automated, and the problem of these duplicate invoices can be try to get tracked. And the revenue leakage of VAT refund process, which used to happen in a manual, invoice collection and then submission to the government authorities, all of them can be eliminated because you have got a trail of these transactions on the blockchain platform. And lastly, in terms of these deep learning algorithms, now you have seen the rapid proliferation of new facial recognition algorithms that are coming up, and most of the payment systems in China, if you can see, are very advanced in terms of making the payment architecture very simple and seamless. One could be the recent introduction by Alipay in terms of the Smile and Pay, which is basically to show your face into the machine and then get your payment done through authentication subsequently. So the point is basically most of these technologies, including artificial intelligence, have started from the private space, and now they are getting extended even to the public space, and the pilots are currently happening by different regulatory authorities. But the challenge, I think, is very important challenge is one in terms of defining the right policy landscape, because we know these technologies are all touted for second of a very efficiency and also in terms of crime prevention and reduction, but there are not many challenges, and I try to put these challenges into three different buckets. One is basically the legitimacy of these technologies. So how do you ensure that these technologies are also legitimate from the eye of law? For example, how do you ensure that the contract is non-reputable in a legal terms for a blockchain transaction? And how do you ensure, for example, an artificial intelligence enabled, say, for example, a lending decision can stand in a court of law from a fairness perspective or something like that? So the legitimacy of the transaction, including, for instance, a digital currency payment. So how do you make sure that the cryptography is a legitimate cryptographic, legally enabled cryptographic technique? So I think the legitimacy is one challenge that they will face. Apart from the technical legitimacy, there is also legitimacy with respect to the privacy of the data that is underlying. That is another important challenge. While privacy, there is a lot of effort that is happening across regulators, the legitimacy is still a challenge. And then we have the algocracy. So most of these new technologies bank upon these deep learning algorithms, and the fairness and the accountability and the transparency of these algorithms is not yet tested. We don't know what sort of data is getting used and what sort of implications that are being having on the people's, say, for example, applications that have been rejected or the decisions that are not being taken. We know the outcome only in terms of the decisions taken, but the decisions that are not taken by these systems, whether they are like rightfully rejected or not, we need to understand from a fairness, accountability, and transparency perspective. That's another policy challenge. So a lot of effort is going on in terms of algorithm accountability. And the last thing is basically about the efficacy of these technology tools. So from an efficacy perspective, now how do you ensure that there is a societal redistribution of, say, for example, the benefits of this technology? So how do you ensure that these technologies do not really bring in questions about equity of the society if there is any kind of a displaced citizenry in the process, like, say, for example, with a driverless car, and if they are getting replaced with, say, for example, the machine. So how do you ensure some of these questions which we don't currently think as an important question, but going down the line with the proliferation of these technologies and the removal of most of these bank force, for example, who used to handle a lot of these customer transactions and a lot of this manual trading, if they're getting replaced by these new machines. So what are we going to do with this displaced workforce? At some point in time, we have to hit that question very hard, and we need to come out with some kind of a societal models to re-employ them in an effective way. I think these are the challenges that the regulators face. On one hand, they have got a lot of hope in terms of using these technologies for public good. But before really realizing that dream, they have challenges of legitimacy, algocracy, and efficacy to take care of.
Yeah, and so you mentioned a few very important trends, and this trend, for me, this will exist. This is not a short-term phenomenon, but interestingly, that financial sector is not the most innovative or most adaptive in especially considering the technology change. And you have been observing many of the forefront runners of their innovations. So do you have any examples? Some banks or some key players who are adopting new practice and then to just streamline the compliance, and also just try to harmonize the process and make it or improve the service provision?
Yeah, I can give you examples from the development banking space, but these two examples are outside the bank that I'm working for, but these are all early innovations that I have been fascinated to learn about. One is example of our development bank from our Brazilian context, the Brazilian National Development Bank, which has faced a kind of a tremendous challenge in terms of the demands of transparency about its operations in the recent time. So in order to ensure that there is a kind of image building and also the information sharing mechanism with the public at large, BNDES has started leveraging upon the blockchain technology. So for the kind of loan funds, the grants that they receive from the institutional donors from UK for the purpose of the Amazon development. So they have done a kind of a pilot project of creating a blockchain where the donor authority and the final recipients of these funds, including, say, for example, the intermediaries who are involved in the process, like your consultants and the contractors, all these people have been put up into this blockchain platform, and there is a native coin that has been created for the purpose of translating this real money into a kind of token that can be exchanged within this limited platform, the BNDES token, but it is maintained on par with the real value of 1:1 of with the Brazilian reais. And once the money comes as a kind of a grant, and then this is converted into one BNDES equivalent token, and since then the flow of money starts across the cycle of from the BNDES to the entities which are the project implementation agencies, and from there to the contractors and suppliers. And the beauty of this system is also is that there is a kind of a portal access that is provided to the public if they want to see the traceable movement of the funds sector. I think that's where a kind of claim in terms of the transparency can get addressed by the development bank in terms of what these funds are being used for and who are the entities participating in the system. I found that as a kind of a good example, and we had an opportunity to share these examples across some of the forums that we have attended at international level, some of these like organized by the OECD. The other one I can talk about is not in a context of a development banking, but has been done by the, say for example, by the World Bank itself in terms of the bond issuances, when they can create all these bond issuances on the basis of the blockchain actually. Again, the creation of these entire ecosystem of the investors and all the other stakeholders associated with the bond issuances, if you can keep them into this platform, there is a lot of advantage in terms of making sure that the proceeds of the bond, the manner in which they have been priced, and the periodic information flow in terms of the disclosures that they need to give. These are easier to handle when you can put these things on a blockchain platform so that the investor disclosures the efficiency and also the process of, say, for example, handling the payments across the system can get accomplished in a much better manner. I think these are the two examples, one from the National Development Bank and one from an international development bank. One in the context of a regular financing operation like a blockchain-based bond issuance, and one in the context of a blockchain-based, say, for example, loan distribution and tracking process. These two are a good enough examples, but there are many which are being done. And each of them are being under the current pilot stage, not just to make sure something what historic is going to happen, but they're trying to make sure that their organizations slowly adapt to this kind of a new change, and the experiences are shared in terms of the implementation. So it is not about any kind of a big shift, but it is about the learning experiences that they are trying to gather from these pilot implementations.
Thank you. Yeah, and now come to Brian. Is this happening in the US as well? And also, what does this potentially impact the compliance professionals and even the industry? And just thinking about, if blockchain can just make sure that blockchain technology can just really authenticate or just of the transaction. And then we have the deep learning technology, which can really help to identify any potential non-compliance. So does this leave the compliance officer any work to be done what will be the impact to their jobs? So, any thoughts?
Well, yeah, I do, and I think blockchain in and of itself is extremely powerful, and it fits very nicely, oftentimes, with the way a compliance program or compliance platform could be built. So, in the world with which we operate with private equity and basically financial services in general, whether it's know your customer, whether it's AML, whether it's documenting and diligencing the client side of who they are, the beauty of a blockchain build allows you to track and trace and almost instantaneously know who's the other side of that transaction, from origination to ultimately as you're facing that transaction up front. And so I think it's a natural segue, and there's lots of technology, compliance technology tools out there that allow a financial services and a private equity firm, for that matter, to contemplate the technology using blockchain. But having said all that, I think what a particular challenge we face in that example would be that the uniqueness of blockchain is the immutability aspect of it, and that's very critical because the content is always protected. But there's another very critical compliance element in the world of financial services, and that would be privacy and GDPR. And when you think about GDPR and you think about the essence of what this mandate will call for, which is one thing, for example, would be the right to be forgotten. And so how do you, and those are two very colliding aspects that you have to think about, AML and KYC and the natural connectivity, the connective tissue of what blockchain gives for doing know your customer work, which has been historically very manual, and this technology now and leveraging blockchain on its own alleviates all of that against a collision course of what GDPR demands today, which is client protection and knowing the other side of that transaction, and the importance of the right to be forgotten. So those are two very conflicting challenges that we face, and how do you work the two together is probably a big emerging element that we need to think about as an industry, as you operate in the blockchain environment that's resonating more and more with which we operate.
Yeah, and Carrie, so when a lot of when we have a lot of conversation with innovators, and many times we just got the same impression again and again, and many technology folks who come from a problem and a problem solving goal, but have very limited experience in the K industry, where the problem exists. So you mentioned, in the compliance that even regulators may not know, your business well enough to regulate. But, for innovators, what exactly should they learn before they just tell you that, we have a solution for you?
Sure. And I talk to a lot of innovators on a regular basis who call me up and say, we're going to build a platform to do X, but they don't know really what the underlying issue is, because they could gather data very quickly and they can analyze it very quickly, but is the sum of the parts going to really solve a particular problem in the financial services world? So, it's just a lot of collaboration around people like myself and the actual innovators who know how to do all the programming and work their magic that way. But just long conversations about what are the regulators focusing on, what are the most common enforcement actions related to, how can we solve that? How can we make sure it's documented? And then, of course, with the SEC, we have to maintain the data for a period of time. It depends on what it is, but up to 6 years. And then we have to make sure that that's completely encrypted and nobody else can get into it. But yet if a regular asks for it, we have to supply it within 24 hours. So it's really a lot of give and take back and forth to come up with a really good solution. And then of course, once an innovator comes up with a great solution, they want to price it out of the market. So there's a lot of that too, because they don't understand what the budget constraints are for a compliance program. So I've seen some great solutions and they'll say, oh, it's $100,000 a year. And I'm like, okay, well, you know, John Smith and company down the street only makes $100,000 a year. So you're not ever going to sell it to them. So they have to find, you know, a way to get to market.
Absolutely, absolutely. You know, yeah, they need to solve the right problem and at the right price, not, you know, overpricing it. Yeah, and Srini, I want you to just comment on a very specific scenario, because, you know, you are based in China, and you also, you know, studied or researched a lot of on the topic of central bank digital currency. And you also understand that, you know, China potentially is going to pilot CBDC in a few cities this year. And, you know, after the central bank digital currency is introduced in the system, and, you know, how does it impact the compliance for all the banks and other financial institutions? Are there any impact, or the impact is minor?
So I think I'll answer this in 2 layers actually, because the PBOC launched digital currency, which is called as the DCEP, digital currency electronic payment. That's the name that PBOC has given to this digital currency. And they have launched, as you said, in 4 provinces, basically, Shenzhen, Suzhou, Chengdu, and like in Shanghai new area. So these are the 4 locations where they are trying to do a kind of a pilot testing. But there is no official pronouncement in terms of when will the actual rollout that is going to happen. The market news, basically the murmur is basically that it could happen sometime for the Winter Olympics. There could be kind of a full-scale launch that can be expected when the Winter Olympics gets hosted by this country, China. So now, having said that, the DCP is going to be completely technologically a very sophisticated way of looking at the currency, because it is not digitizing what we have in a bank account. It is basically the digitizing of M0, that is the base money, at the currency in operation. So there are a lot of these security and technological innovation features that are being publicly announced by PBOC. Some of them include, say, for example, transactions which can happen even without an internet. So if you can bring 2 mobile phones into contact with one another, then the payment transactions can happen through smartphone technologies, but without any internet also. And the challenge with respect to cash being replaced with digital currencies, the concerns are the balance that is required between anonymity and also the security, because cash is always vulnerable to financial crime in terms of money laundering and corruption. But on the other hand, if you try to digitize, then a lot of the aspects relating to privacy needs to be, say, for example, taken care of. So what PBOC design is saying is basically to follow what is a practice called as a controlled anonymity. By controlled anonymity, it means that in the way the PBOC DCP works, the central banks remains the sole issuer of the currency, but this currency in the way the current currency distribution system works, it will not be distributed directly by the central bank, but 4 major banks in the country and also 2 major fintech players like Alibaba and WeChat. So those are the players also can get a kind of a distribution role of this currency. So the money will flow from the central bank to these digital entities, to these entities, and from there it can be transferred to the public in form of the digital wallets that they can hold. So to a large extent, I can say that the working operation at the hands of the individuals will be similar to the way in which, say, for example, a digital wallet, which any of these players have already given. So to that extent, I don't see any kind of a technological challenge, which is very heavy or a very kind of a tricky that is going to happen. but the model in which, say, for example, the currency is getting designed will make us to rethink about a lot of these nuances about how currency and how money is getting transacted in the society so far. I think the currency is also expected to be a smart currency. So that means that you can have a lot of these algorithms that can be made possible through the design of this currency. If you can go through some of these published papers of the Digital Currency Research Institute, there is possibility of this currency which could be made a kind of an algorithm-based currency. So once you make that, then there is a lot of leverage or a lot of flexibility that the currency can give to the central bank in terms of defining a lot of variables necessary for the monetary policy making. So in terms of making sure that there is no loss of monetary policy transmission of a policy mandated by the central bank to the banks, this currency can help a lot in terms of the conditionalities that the central bank wants to impose on when to make the currency valid. To which sectors of the economy the currency can be pushed through, or at what rate of interest you want this money to be pumped into the economy. So there are some of these challenges which are currently being faced by most of the central banks, but there is no clear answer because the central bank is only a policy authority, but they don't have the back-end data to really enforce this through the commercial banks actually. So a lot of these things happen after the policy announcement happens. A lot of them are dependent upon the central commercial banks, how do they react to the policy statements. But in a DCEP kind of a scenario, there is a possibility that this currency can be used as a kind of a tool when these issued to the commercial banks, and they can be made operational only if the central bank policy mandates are fulfilled by these commercial banks. I think that is going to be a kind of a big game changer in terms of the way the digital currency is getting conceptualized. So I think on one hand, in a country like China, where the people are already gone 90% cashless, and they're already used it to in terms of making payments without carrying their wallet or any kind of a cash in their pockets. I don't see in terms of a user experience, it would not be a big game changer, but it would be a kind of an alternative choices that are getting enabled. But DCP definitely will make a lot of use in terms of other countries which have not yet pursued digital wallet operations as such. But for China and also for most of the other countries, what is worth watching is to see how this currency is going to give additional features of money, so which we haven't even conceptualized in our traditional understanding of digital wallets, so that you need to make a difference between a central bank digital currency and a bank's digital wallet. If you can't make that difference, then there is no point in terms of launching a central bank's digital currency. Now, I think that is going to be the major game changer, in my opinion, in terms of how the CBDC is going to differentiate itself from a kind of a bank's digital wallet. It does not threaten the existing architecture of a dual structure of currency issuance and distribution. So the dual structure still has to be maintained. There should be a central bank. There should not be a direct access of central bank funds to the public. So there should be intermediaries, and there should be a banking system which has to operate. But at the same time, once the central bank opens up its wallet, so the additional data that the central bank is able to generate, how it will be used for its policy purposes is something we have to wait and watch for, and that is definitely is going to be a kind of a learning in itself for not only this country but also the entire world to learn from the experience.
Thank you. Yeah, and so my last question to each one of you is the same, because all the three of you have a long track record in the industry, and look back, what lessons we have learned, and which can be useful for the future. And especially consider this is a very interesting time, and the future is, we are really just witnessing something very exciting which is happening. And of course, that's the challenge remain the same. That's we still have a billion people who are unbanked, underbanked, and who don't receive proper financial service. You want to use the innovation to empower them, but in the meantime, we also see that the new technology has also its could create a new digital divide, could also create a new type of compliance related challenge if you want to strike the balance there. And in the meantime, that with the new technology can come up, potentially that the compliance cost can be dramatically reduced, and the future of the compliance professional might be different. And then from the government or regulator side, that what do you want to regulate, what you don't want to regulate, and how you want to just regulate with the technology, what can be done by the human being, what can be done by the technology. So for you, what does the future of compliance look like? What do you want it to look like? From Brian.
All right. Yeah, there's a lot to that, right? And it's a very good question. And I think there's a few obvious tenets and takeaways, and a lot of which I think we talked about in this moderated panel. One, it is very tricky to balance technology and the right technology. So I think what I'll do is I'll give the challenge and the emerging development and what I think in effect one needs to do. And what comes with technology and adopting the right technology is to do it carefully. Always be thinking yourself as a business. So there's a cost benefit analysis. I always like to equate an investment in that technology to the optimal benefit of production cycle saved. So it affects the FTE that's being saved, and treat that very seriously. Do a lot of testing before the technology is adopted, and hit it with anger and hit it with skepticism. So you're looking at the technology in the right way. You really want to demystify the right technology. Let's also keep in mind, as we talk about the technology within the firm with which you operate, it's the brand new technology that the regulators are adopting. And so as they're thinking about the digital tools, so are you. And so it's good to have an educational platform on that. I think Carrie hit this. It's like educating the regulators and having them appreciate how you're building your platform, understanding what the regulators are doing. We in the US deal with a very fractured regulatory scheme, and you have the FRB and the SEC and FINRA, and so there's always a fight for having a common ground on that and having the right baseline of taxonomy, because if you want to have a harmonized technology scheme, the technology has to talk to one another, so the language needs to be the same. So I think that's also very important. And also very much bear in mind as we shift to digital technology and thinking about the right technology, that always introduces the risk of fraud, right? Because there's gaps that get invited. There's vulnerability that you might inadvertently produce. So as you build that technology, think about the vulnerability that you might inadvertently create. So be mindful of that downstream effect. So a lot to think about. You have to think about it in a very coordinated way. And you need to, frankly, crawl before you walk and walk before you run, versus leaping to the effects of pacing too quick. So you have to have a moderated approach and think a lot and talk a lot and have a lot of transparency about where you're taking it.
Thank you. Yeah, for Carrie, and the same question. And what do you want the future of compliance look like?
I would like it to be more well respected by senior management and owners of firms. I'm fortunate because I own my own firm, and I also am a former FINRA regulator. So I respect compliance probably more than anything else. But the technology, you just have to stay flexible. It's something new is coming out every day. Some of it may fit your business model, but back to what Brian said, that's also going to be suspect of vulnerabilities where hackers could get in and disrupt your overall compliance system. So, it is an exciting time, but it's also one where I think we're just really at the infancy of finding technology platforms that will streamline and automate some of our compliance systems. I don't think that the actual compliance officer job is not going away anytime soon because, technology isn't as flexible as people. And that's just, always going to be the case. So, it takes a person who's overseeing whatever platform you're using and know when to pull back, maybe shut the system down even, so you can assess the current issue that may have come up.
Perfect. And Srini?
Yeah, normally whenever these kind of big challenges that come, the normal tendency of a compliance officer is to be like more reactive in terms of trying to understand the new regulation and trying to prepare the organization in a very reactive manner. To some extent, you try to proactively engage with the regulators. But I think technology invasion or technology intrusion into the life of the compliance officer is not going to be like a regulatory, what you call new regulation or something like that. So it is going to be kind of changing the life of the compliance officer in a big way. So I only try to articulate the life of a compliance officer, the skill set of a compliance officer in terms of adapting himself to the new world should be to make himself relevant, to reorient their own strategies and to remain resilient. So these are the 3 R's I would try to mention. To maintain the relevance, basically, we need to also start unlearning as a kind of a habit. While most of the compliance officers focus on learning, and most of the compliance officers try to grasp new complex topics of learning. But I think sometimes with the new technology innovations, they also need to focus on unlearning and also relearning. Relearning is basically not necessarily to learn only in terms of, say, for example, the new regulations, but in terms of how these new topics, say, for example, when we are talking about money laundering, the unlearning is basically that money laundering can happen only through hawalas, or money laundering can only happen through, say, for example, wire transfers. So these are all the things that are fast. So how, say, for example, crypto juicing or cyber cleansing are the kind of new terms that will enter into the lexicon of compliance officers. So for that purpose, they need to relearn themselves and their own investigative models in terms of how to handle money laundering through, say, for example, cryptocurrencies, or what are these Bitcoin tumblers and how do they assist, say, for example, money laundering. So there is a need for us to really make ourselves relearn the things. And then there is a need for us to reorient ourselves because most of the compliance officers are tuned to think in a safeguard mentality. Safeguard mentality is basically we always try to see that what harm that these innovations are going to inflict upon the people, and we try to rectify those harms actually. But apart from that, we also need to focus on the new users of the technology, not just having the kind of a safeguard mentality. Then only we'll be able to really engage with the regulators, engage with our stakeholders and our management, especially in terms of implementing this technology for a fruitful use. And then resilience. Resilience is an important thing, so we should not be like worried about too much of failures that can happen, because technology itself is in a very testing phase. So we should not like, we should be partnering with our management and also with the industry in terms of allowing for some amount of failure to happen, because unless those failures happen, you really cannot see the structured development of these tools and techniques. So we need to be resilient to that extent. We need to ensure that there is a kind of a safety net created, but to that extent, within the safety net, you should be resilient to some kind of a failure that happens. So you should stay relevant. You should reorient yourself to the new reality, and you should remain resilient to any kind of unexpected shocks that come in the way, because these are all expected when a new innovation is going to take over the existing activity. I think that's how a compliance officer can stay more relevant to the current times. That's all for now. Thank you.
Thank you very much. Yeah, and I think that's this is such a rich discussion, and we probably covered all aspects of compliance, and I really enjoyed especially the last question, and from your the 3 of you to really from Carrie that's try to respect and also be flexible, and from Brian that's try to just make sure that you have all the different pieces coordinated, and where that's you have the system which really work. And then with Srini, that's interestingly that I always try to find a way to just communicate to different folks why they need to change. And I think you gave a very good framework that someone who always are against change, they need to unlearn. And otherwise, they becoming the barrier for progress. And for many who just running like so fast, and then they actually didn't have time to learn what happened before, then they need to go back to learn. And then for those who are really open to the change, and also who are ready, they need to relearn the skills and be part of the new game. And I think this framework is really, really powerful. And I hope that all our audience will enjoy this conversation as much as I do. And again, thanks to our great speakers. And I hope that we can have you back in our future shows. Thank you very much.
Thank you.
Thank you. Thank you. Pleasure catching up with everyone. Thank you.
Perfect. Yeah, and for this one, that's we basically will just edit it and upload it, because we normally use like Crowdcast as our platform, and then we'll just download this, edit it, and then upload it to share. So that's why we didn't invite any participants to this.
Perfect.
Okay, so thank you, and good night to Srini, and have a great day for Brian and Carrie. Thank you.
Thank you so
Good day
much.
to all of you. Take care. Bye-bye.
Really
Thank you.
appreciate it. Thank you.
Bye.
Goodbye. Take care.